Welcome back. You're watching Commodity Champions, and joining us to talk further about the agriculture space is Mr. Atul Chaturvedi, who is from Shree Renuka Sugars. Mr. Chaturvedi, hi, thank you so much for joining us. What has been your sense? Because the food grain estimates have been at record highs. How much are you reading into the first advance estimates? Is it too early? Because we've also seen some unprecedented rains in some growing belts. Would that have an impact on the final numbers?
No, we have no yardstick as of today to check whether the government numbers are correct or wrong. But having said that, the late rains and the post-harvest rains definitely would have affected soybean, whatever had been harvested, and even I believe paddy has been in trouble. So we'll have to look at the final numbers when they actually come out in November. So it's early days to start guessing, but definitely there will be some damage because the rains have been quite extensive.
What's your sense on the sugar prices? I mean, there have been a lot of measures in this week and the previous one, starting right from ethanol to export subsidies. Are these all measures rewarding enough, or is the industry watching out for some more?
As far as the sugar is concerned, in fact, the sugar production is likely to be pretty strong, maybe in excess of 35 million tons or thereabout. But having said that, there has been a slight issue in terms of the sugar output which is expected in Maharashtra. By all accounts, what we are hearing is Maharashtra could be down by about 8 to 10%. Karnataka may be marginally up. So overall, we should be, when we are talking in terms of 36 million ton, I don't think that's going to happen. Probably we'll stick around 35 million tons, which is in any case almost 3 million ton higher than what it was last year. So we still would be saddled with higher sugar stocks.
Oh, well, absolutely. But oilseeds is one area, and you watch that closely as well. We are looking at a good crop onto that one. What is the sense on year-on-year basis, and how much would that impact the prices?
As far as oilseed is concerned, the only increase we are expecting is in soybean. Soybean from a level of about 8.2, 8.3 million tons last year, we are looking at a figure in excess of about 10 million tons. Groundnut, which is having much higher oil content, that seed is in trouble. That crop, because Gujarat suffered massively as far as the rains are concerned. Surprisingly, the other oil seed produced in Gujarat, which is castor, this year looks to be in trouble as well, because the acreage under castor has come down. So I don't think it's an even situation across the country. So you have some commodities which might do well, but others which could be in serious trouble.
What also is your sense on the agri exports target of the government? How achievable is $60 billion by 2020, $40 billion by end of this year? Would you say that we are on track for these numbers?
As far as the agri exports is concerned, I'm not too gung-ho on agri exports, for the simple reason that with high MSPs, it is bound to make our exports uncompetitive in the international market. And coupled with that, we have weak commodity prices right across the world. The only silver lining in all this is that the Indian rupee is a little wobbly, which makes exports much more competitive than what they were earlier. What we've requested the government from the C side is, Solvent Extractors Association side is, that they should give 10% MEIS incentive to ensure that the oil meal exports actually take off. And I'm sure the government is favorably inclined, so we have still not got the final green signals from them. But let's see how things pan out.
Well, absolutely. We are also in a watch and wait mode there. But, one question that I've been asking everybody is that while the MSP hike has been much applauded, implementation, how big a challenge is that?
My sense in all this is that we are in for very, very interesting times, in the sense that the government and the politician would be hell-bent on ensuring that the farmers get the MSP, which they should. Market forces might actually bring the prices down below the MSP levels. And in that, you might see a scenario where the government ultimately has to end up buying all the produce from the market. What we have told the government, or what we have requested the government, is don't end up buying all the oil seeds or all the grains from the market, because that would fill up your coffers and starve the industry raw material. So that is not a happy situation. So that needs to be corrected. So what we've recommended from our side is that the government should actually implement the Bhavantar scheme, or the price differential payment to the farmers, and let the market forces do their work. So that will ensure that the raw material is available to the processing industry. Government is not saddled with stocks, and the farmers also get compensated by way of, there were some glitches in the past. I'm sure last 1 year experience would have ensured that those glitches will not happen again. So that should be implemented. So that will not allow things to get distorted if this is implemented.
Well, implement they will have to, but as you said, a point worth reckoning is that, yes, the government will either procure more or spend more, whichever way that is, to ensure that the MSP is implemented. Thank you once again for joining us and giving us a sense on what the markets can anticipate in sense of the agro commodities. But with that, that's all the time that we have on this edition of Commodity Champions. Thank you for watching.